And welcome to the weekly roundup. This week we got Matthews with us. Hey, Matthews.
How's it going?
Doing great. Let's hop into it. We got 5 topics in 20 minutes. I guess this is our first repeat on the weekly roundup. We're talking about gas prices again. There was a article in the Wall Street Journal recently talking about an unusual leap in gas prices could get us to $3 a gallon by this summer. And I was thinking about that, obviously, what the cause of it was, but at the same time, I just don't know that that's really going to stop anybody from moving around. I mean, obviously, from an economic standpoint, it diesel's up as well, so it's going to cost more to ship goods. But we're not at unusual prices based on where we were with the pre-pandemic, right? And I think people have been sitting at home so long that, man, they're going to go to Disney World no matter what.
Yeah, I mean, I think that's probably a good sign of the turnaround of the economy, that the prices are going a little higher. I mean, you'd obviously want them lower, but yeah, like you said, I mean, there's going to be some pent-up demand where everybody's ready to get out and travel, whether that be with planes, but definitely with closer trips where they're able to drive to places, just moving around.
I mean, they're talking about basically there's not enough backlog. That's the main reason. I guess when prices got negative last year and making or the, what am I trying to say? The gains, the money made in refinery went negative during the pandemic, that basically they quit making the stuff.
Yeah, the futures were negative at one point, and at that point it started costing more to store than it was to make it. So I think there probably was that backlog, and we're seeing it now with obviously the little bit less supply with this huge demand that they're expecting here in the next few months through the end of the year.
Well, something we should keep an eye on. That's part of inflation too, right? We keep talking about inflation could be higher going forward, and that's one place that you would see it is gas prices and other things related to travel as well. Let's go ahead and move on into Treasury yields. So, I think it's interesting to look at the 10-year. The 10-year Treasury is a reflection of so many things. One, it's the risk-free rate that we use when calculating investments and our expected or desired rate of return. We look at a year ago, Treasury yields were around 0.6, 0.7%. Now we're around 1.6, I believe, was the last one I saw. It's like 1.63 now. So looking at 1.63% Treasury, people are starting to freak out about this, and I don't know that's such a bad thing, honestly.
Yeah, I mean, that hit actually 1.7 at one point, which is the highest since the pandemic. Historically, these are still pretty low. It's just a switch up from what it's been. In terms of percentage points, though, I mean, that's 114% for a year a rise, and almost 75% year to date. So it is a significant increase, but it's still not enough to really significantly historical rates make a difference.
So what does that mean to the everyday investor, though? Think about if Treasury yields keep rising, obviously our bond portfolios are going to suffer. The values are going to suffer, but it comes back because, through the bond fund, those bonds get sold off, maybe at a loss, but then you're buying back new bonds at a higher yield. So eventually it kind of sorts itself through the bond fund. I don't know that you need to abandon bonds because the yields are rising.
Yeah, we've talked about it, kind of just what's going to happen at being at historical lows, the inverse relationship with bond prices and yields. So that's just something that's probably going to work itself out here over the year. Worth noting is it is going to be a different policy. Last year was more monetary policy with Fed rate cuts, expansion of the balance sheet, the different liquidity they're providing. This policy seems more of a fiscally related and really focused on job growth. So it is kind of a different philosophy they're taking moving forward this year.
Yeah, I think the target is having inflation above right at 2%, right? Last year, in the last 12 months, I think inflation is less than 1.5%. So they're still working really hard to try to generate inflation and prevent a deflation environment. I think that's what they were fearful of for the last few years. But I guess for savers, it's a good thing, right? Because eventually that means the Fed has to raise their funds rate, which means your savings account doesn't pay you 0.002% anymore. So there's positive things that come on with higher Treasury yields. It's not all negative. And I will say this: that I feel like that just the pundits out there that talk about this stuff every day, I feel like that they draw these lines from point A to point B, and it's not a straight line. It's a squiggly line, and whether events are going to come our way that you want to own bonds for, right? So if the stock market's going to sell off because of a black swan event that we're not even pricing in right now, people are going to cling to the bonds that nobody wants, or they say you're not supposed to want. So you don't gut the bond portfolio just because of the rate changes. Let's talk about our next one, Netflix. I just saw this article in the Journal this last week. I thought that was interesting. Netflix is going to start cracking down on subscribers that are sharing their logins. And so they know who you are. They know that this Netflix was signed in New Jersey, and they know that this Netflix was signed in Atlanta, and it was done maybe approximately at the same time, and you're only paying for one subscription.
Which they're really just going off the IP address, and they've probably been able to do this the whole time. They're finally just actually cracking down on it with those passwords. Interesting article I saw was actually a third of subscribers are actually sharing passwords. So that's a pretty significant amount of subscribers that are actually sharing passwords, considering the average, I think, plan's about $13 or something a month.
Yeah, I think there's might be a basic one for cheaper than that. It's hard to imagine people just won't pay the $13 and get their own login, but I don't know. I'm a little older than you, Matthews, and I remember when people were pirating CDs. They were sharing copies of Microsoft Office with each other, right? So I think this is just human nature that we want to get something for nothing, and so I mean, Netflix has every right. If you're using the stream, then you should pay for the stream. But I think what's really happening is people are buying other streams, like Disney Plus, and then they're sharing that with their sister or brother, or their friends, and then in return they're getting their Netflix login. So I think there's probably a lot of that happening. But I don't know. You have a chart here showing the Netflix price change in the last, or I guess year to date, and maybe a lot of this has to do with the price of their stock being down a little bit this year.
Yeah, Netflix was obviously part of the FANGs discussion last year and the years before. It was this huge growth stock, and now it's kind of just hanging in there, which is actually kind of surprising considering work from home. Most people you would think would be actually downloading more and watching more Netflix, but it also could have to do with their competitors now, because you have Peacock and HBO Max, and as you mentioned, Disney. So kind of the new world moving forward. They were in front of it, kind of starting it out, but now everything's going streaming and digital. So it might just be the world they're living in now with more competition.
Yeah, everything is a subscription now, right? So if we're going to have subscriptions for everything, I just feel like at some point you get subscriptioned out. I mean, I was listening to a conversation recently. A lady had issues with her disposal at her house, and so she called a plumber, and the plumber came out and wanted her to sign up for a subscription. You just pay the plumbing company a monthly fee. If they had to come out for something, then it would cover, these 10 items or something. I just sat there thinking to myself, wow. I mean, even the plumbing companies are offering subscriptions now. That's crazy. I mean, what else?
I've seen doctors doing that now too, where you provide a monthly payment. Obviously, some of it's not covered by insurance, but instead of having to make your yearly visits, you can make kind of on-call demands when you wanted to go there just through a subscription-based service.
Yeah. I do something similar to that. I have a service called MDVIP that allows me direct access to a doctor, and it also guarantees me that doctor is not going to have more than, I think, 400 patients. So if you need to get in, you can get in usually same day. Sometimes they'll do house calls if it's really bad. I'm not in that position, thank goodness, but I'm sure a lot of people who sign up for it is. So in the medical community, that makes sense. I wish hospitals would do that. For people who are more likely to go to the hospital, that they would have a direct access. But I think that kind of contradicts with medicine a little bit because they're supposed to help everyone, treat everyone the same, right? It's the oath that they all take. But yeah, that I think the Netflix story it's very interesting because if they start doing that and cracking down, then I would think everyone else starts doing it too. And maybe that's the right thing to do. Just pay for your subscription or cancel it.
It's not a ton. If you can't afford the $10, then might be one of the things that you need to be cutting back on anyway.
I noticed that on YouTube TV that now that there's all these different packages. So you can want the NBA package, you can turn it on or turn it off. So even subscriptions are getting more flexible where you can have a basic subscription or you can turn on these additional channels if you wanted that.
Yeah, I know Hulu was like that. You can have the cable or you can have just each additional add-on like that. So that's maybe that'll change the way it's operating moving forward. Where that's kind of what people have. They'll pick and choose what they want to have.
True. Okay, we should have made this the first topic, or else we never have gotten to any other topic. But an NFT. Explain this to me.
Yeah, so we're about to go out there pretty into space here a little bit. If you couldn't wrap your head around Bitcoin. Now we're going to talk about NFTs, kind of a new thing, phenomenon that you'll hear a lot more of in the news, and that's a non-fungible token. What that means is it's really just buying certain rights or tokens on a blockchain. So, you used to buy baseball cards and, comic books. There was even Pokemon cards. Higher net worth people have fine art and collectibles. Basically what this is you're buying the rights to some type of digital asset. There's tons of them out there, and they're just selling for ridiculous prices. The biggest one was a guy named Mike Winkleman. He goes by the artist name of Beeple. He just sold a digital art for $69 million. And it's like we've talked about before. All you're buying is a digital right to this art. You're not showing it to anybody. It's not anywhere. You just own the digital aspect of that. It'd be kind of like, when you go to a concert or a game, you have a barcode. It's got its own seat number and specifications of what that is. It's kind of similar. You're really just owning some token on this blockchain, and you buy it through some type of blockchain. So the biggest form is Ethereum. There are Bitcoins, but really what you do is you can just NBA Top Shot is where you could buy different clips of NBA players, and you can use a credit card for that. But besides that, you're using Ethereum or some type of blockchain, digital assets, and you're making a bid for the price of this, whatever you're bidding for, and then it's auctioned off, and eventually you own that digital asset. But like I said, they're just going for ridiculous prices.
So if I went to Google and I typed in pictures of the mountains and I went to the image results, you have all these digital images. Now it could be a picture of a picture, a real picture, but it'd be like a digital image. Someone made with their computer pictures of, let's say, the Grand Tetons. That's digital art, right?
Right.
So then they're putting that up for sale, and people are using digital coins to purchase it, and they're paying millions of dollars.
They're bidding on it, so it becomes a bidding war of using Bitcoins or Ethereum or whatever digital currency. Yeah, and they get bid out for millions of dollars.
But not on eBay. Who's hosting this stuff?
Yeah, so there's two specific ones that are the biggest, OpenSea and Rarible. OpenSea alone this year has had 83 million in volume, and Rarible's had 20 million in volume. So these are a lot. There's a lot of turnover going on in these platforms.
And then how do you show this art? I go down to the local art store, and I like art, and I find a piece. I like originals, so I find an original, and I buy it, and I take it home, and I hang it up on my mantle. What do you do with digital art? Where does it go? Do you pull it up on your phone and go, look at this really cool painting I got for $69 million? I guess I don't understand that. I guess with the LC or LED screens, or even the newer stuff, the screens are so thin you could mount that onto a wall and no one would probably ever know. You can put a frame around it. No one would ever really know that it was a TV, right? And then you would just have the digital art on the monitor, maybe. I don't know. I'm just making that up. I have no idea. I need to know more.
Yeah, this is kind of the beginning of this, and I think you'll hear more. People are making a lot of money. Some other ones that were popular, Twitter CEO Jack Dorsey sold his first tweet for $2.9 million.
So $2.9 million for a tweet. So if I knew Jack Dorsey, I was a friend with him, and I took a screenshot of his first tweet,
and you use that online and sold it for something, then I guess you're technically copyright infringement or something.
Yeah, I guess so.
It's the same thing for these Top Shots. You're buying clips of certain historical, dunks or big games. You're buying little clips of that. I mean, I think that's on YouTube, so I don't know what the difference is between owning these clips in a digital form versus actually seeing them online.
I like to buy that clip of Michael Jordan when he jumps on the slam dunk contest and he jumped from the free throw line, right? And he's like,
I had that poster in my room. Is that illegal now? That they can they take that because it's not a digital copyright of that?
I don't know. I'm sure not, but I guess whoever owns that video clip, which I don't know who would own that.
It's all out there.
Yeah, I wonder how. I mean, if you create it on your computer, art, and you sell it, that makes sense to me. But stuff that happened before the internet was even hardly alive, I don't know how they're going to handle that. I guess that's where lawyers get involved in copyrights and.
Yeah, it's not super regulated right now. Another neat one was Kings of Leon. They haven't been in the news for a while for music, but they had just released an album this year, and it was fully through NFTs, and it sold for $2 million. So that could be the way of the future a little bit with sporting events and concerts moving forward that are sold through NFTs and not the actual tickets. Another thing that these are being used for that it's not regulated, it probably will in the future. Just like you can do a 1031 exchange with real estate or 1035 with certain insurance products in order to forego those capital gains or income taxes. A lot of these people are selling Bitcoin, so they're not realizing the gain on the Bitcoin. They're just buying this new NFT with that Bitcoin. So there's no actual transaction sale. They're just buying it with that. So it's one way to, I guess, bypass certain gains on the selling of certain digital currencies.
And we haven't even talked about the virtual house yet. Someone created a virtual home, and they sold it.
Yeah, I think that was $500,000, whatever the percentage of the Ethereum equated to $500,000.
So basically, it was a digital home that you could roam in. You could go from room to room, and even like the bed was like ruffled, like it was like in 3D or something. Like someone had ruffled the bed pillows or something. it was really strange. But yeah, so someone owns a virtual home. I see it with baseball cards. So you buy baseball or any gaming card, Pokemon, whatever, but it becomes a digital card, which is great, by the way, because now you have to buy those little plastic covers that you put the card in. But anyway. So you have the digital covers. I mean, or the digital card. I totally get that, and that could probably be on your phone. I mean, maybe you could like bump phones and they swap, and the digital ownership swaps. I mean, this probably do some really cool stuff with that for kids. But man, this seems to be something of the future. That a non-fungible token, an NFT, is something that. I don't know. It makes me feel old for the first time. So.
It's definitely out there. I mean, Bitcoin was a lot that people wrap their heads around, and that's become more popular. Now they got to add a new way to purchase things with Bitcoin, and that's NFT. So I think you'll hear a lot more about it in the news, whether it be these just ridiculous numbers of people continuing to buy rights to things, or whether it be somebody stepping in and starting to regulate these a little bit.
Well, that's true of just digital currency as a whole. It's almost like it's getting away from the government because you have the currencies. Now we're using the currency to buy other things that still have no regulation, right? Interesting. Last point of the day, the stimulus plan that, you wrote an article recently, a blog for us on that, Matthews. Good blog as usual. I think what I've noticed on the stimulus is everyone's getting checks. Everyone is spending that money. I think I saw 30% of that money will end up in the stock market, which makes me question why we needed stimulus in the first place.
Not just in the stock market, but where it's going in the stock market is a little questionable.
It's going to, Bitcoin, NFTs, and
GameStop.
Right. evidently SPACs, which we have a podcast launching next week on what a SPAC is, and buyer beware, I guess, a little bit on that. But I see some positive things. Airline demand is up significantly. Miles traveled per day in the U.S. via automobile is increasing rapidly. We're talking about hotels starting to be booked. Airlines have recalled. Most airlines have recalled all their pilots and all their flight attendants. Delta's still keeping the middle seat open. I'm not sure what the deadline on that is, but Southwest, United, American, they're selling it all. So I think that we're starting to return to where we were pre-COVID, which is a really good sign. We had a hot economy prior to COVID that was being very well managed, and I feel like we're going to get back to that. So then the next question is in 2022, what does that bring from government policy? But for right now, I think 2021 is looking pretty strong.
Yeah, I mean, this is a good turnaround, and obviously we mentioned the stimulus plan. Biden signed March 11th the American Rescue Plan, and that's what came with the stimulus checks actually on St. Patrick's Day. But there were some options with the child tax credits, independent care credits that had increased that you can read about in our blog that I wrote. But I think that the main thing is not to go to buy Bitcoin and not to buy AMC with this. If you're the fortunate ones who are healthy and not affected financially with this, use that to better your position financially. We like to say, make sure you're paying down your debts, building up that emergency reserve, and then, if you're able to build up additional for retirement funds or any type of opportunity fund, really use that as a way to get ahead and not just spend it just because you're receiving the money.
Absolutely. All right. Good topics. Thank you, Matthews.
Yeah, enjoyed it.